Hey, there's a bubble.
How do you know?
Trust me, call Venet, buy 50 million in swaps on the MBS.
So when I'm researching a company and I want to get into a trade, and then I see something like this, I'm going to go to ChatGPT and Google what happened on this date, which this date was July 25th. So I want to go to ChatGPT and ask ChatGPT what happened on July 25th. Amazon stock slipped approximately 28% decline was due to a company-specific news, but part of a pullback in tech stocks. So nothing happened with Amazon. The whole just tech Nasdaq had a pullback. Mm-hmm. Oh, look at this. The Fed comments, news. It was news that made that pullback. So we had Fed's talk. So whenever the Fed's talk, it gets fucking crazy. So you don't know when I'm being in a trade when the Feds are talking. So you want to make sure you look at the news so you can know. They always give you an announcement like they're having so-and-so speaking at this time, this date, whatever. Don't be in a trade during that time, because if you're on a trade for a call, you know, because look at this big green candle and you're like, oh, it's a big strong candle, we're going to continue to go up. Mm-hmm. Then surprise, Fed's talk, and then it drops.
What if you're... What's the channel you said? CNBC, CNBC News. Yeah. Is this a channel on the TV? Or?
Yeah. I'm so old school. Oh my god.
Can I watch it?
So this is an Amazon chart. Y'all see this liquidity and this supply zone? So I would draw my supply up here.
So you're gonna go all the way back until you get the most recent highest high?
Yeah.
Okay.
And then the low. For me, it will be right here. And I'll go this far. Right here.
You always do it on your 4 hour, right?
Yes. The 4 hour tells you so much. It's more clear than like any other chart when it comes to looking at these key areas.
Okay.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks fell on Tuesday, pulling back from a record-setting streak after Federal Chair Jerome Powell's speech, which signaled the bank would proceed cautiously on further rate cuts and suggested equities were fairly highly valued. And as a result, we saw a pullback in stocks, especially from midday onwards. Nvidia fell 3.17%. The mega caps led the selling. Amazon was down 2.82%. Tesla was down 2%. We did see some Oracle was down 4.85%. We saw software as a whole pull back as well. Microsoft, Apple, Google, and Meta roughly outperformed, but still down on the day. And then we did see some fairly positive price momentum in the rest of the market. However, when we actually break down what happened in the rest of the market, you can see here, it's the XLRE, real estate, staples, utilities, and healthcare. They were green today. These are quintessential defensive sectors, along with gold up 0.83%, a safe haven asset. Energy was up 2%. Again, there's some geopolitical news that's driving the move in energy, so that's totally separate. But defensive sectors gained. Gold as a safe haven was up, outperforming sensitives, cyclicals, and tech, where we actually saw those were all down, and the S&P 500 down 0.6%. Not a good look for the market. Certainly a rotation we're seeing from, these larger sectors into the defensive sectors. Again, not a good look. You can see it very clearly right here. The growth component of the market, which is large cap growth, mid cap growth, and sort of like large cap core. These sectors right here, these drive the majority of earnings growth in the market. They were red today, along with small cap growth, which was down 0.14%. But we did see actually fairly positive momentum in value core for smalls, mids, as well as large cap value. And that is a positive sign. But again, it was concentrated in these fairly defensive sectors. And this was actually very red. So a very clear rotation, very clear liquidation in the market. And that was all coming on the back of fairly poor economic data. I mean, when you look at the PMIs, right, this manufacturing services grew less than expected. The manufacturing came in as expected. The services PMI missed the mark. And then the composite, which is the combination of the two, right, actually came in at 53.6, which missed the consensus of 54.6. But ultimately what the market looked at was Federal Chair Jerome Powell's speech. He pretty much came out and said, we're going to look cautiously to rate cuts because the economy is showing very mixed signals. He said job creation has dropped sharply, possibly due to tariffs. He said we're in a low hire, low fire economy. People will need new skills in this labor market thanks to AI. He then came out and said the stock market is fairly highly valued, and pretty much Jerome Powell continues to be concerned about the labor market. So Jerome Powell is now also Wall Street's leading sell side analyst. He may as well give us his 2025-26 end of year price targets at this point. So for him to come out and say, the stock market is fairly highly valued, or pretty much saying overvalued, actually kind of crazy from the Fed chair. But there were some market movers to the upside today. AST Space Mobile was up 12% on just surging call volume. There wasn't really any news that came from the company to spur on this rally. Very, very big move and completely outperforming the market. The stock was $34 like 3 weeks ago. Insane move we're seeing in the market right now. Oracle was down 4.88% after it announced 2 new co-CEOs for its cloud division. The market obviously not liking the shape up. And then Boeing was up 2% today after an order of 500 Boeing aircraft for China, which has been years in the making, is in the final stages of negotiation and is seen as the potential centerpiece for a US-China trade deal. An ambassador to China, David Perdue, did not offer any details on the size of the order, but said this is a huge order. And then Better Home and Finance Holding Company was up 38% today after being up 46% yesterday on the back of activist investor Eric Jackson calling the company the Shopify of mortgages and his next 100x. And then for everything we saw today, there was 2,600 advances, 3,600 decliners. We saw net inflows in the New York Stock Exchange, outflows in the Nasdaq 100, S&P 500 down 0.64%. Market momentum is starting to destabilize. We lost a 5-day, but again, we do know that this tends to be very, very noisy, but we're approaching the 50% mark here in the 20-day, and we did see an overall deterioration in these from yesterday and from last week as well. So this is telling us that momentum is slowing and we can be losing a bit of momentum, but we are still above the 50% mark, and until these actually break, this market is still a buy on the top of the charts. Now, for all of the red, we can actually see the equal weighted S&P 500 is up ever so slightly. But when you actually look at the charts, right, you can see a shooting star doji is forming right here, and that is on the weekly chart. That is not a pretty look. Now, the weekly hasn't closed, don't get me wrong, but yeah, some of the price action we're seeing does signal that we could see a little bit of churn in the market. That being said, we also did get somewhat of a shooting star doji right here and here, and the market continued to just move to the upside on the back of those. That being said, the S&P 500, the Nasdaq 100 was all down. The Russell 2000 outperformed, and we just saw outperformance in mid-caps and small caps. Value actually flat here, but growth really taking it on the chin. So really a day for value in the broad market. Internationally, European stocks were actually up 0.28%. Middle Eastern stocks were flat, but we saw China and India down significantly. Crypto assets down another day. Both Bitcoin and Ethereum were down 2% and 4% respectively yesterday, and down again here today, although bouncing off their lows, as you can see by this Wix. We'll talk about it a little bit later on. And then the 2-year and 10-year yield actually fell on the back of Jerome Powell's news. Volatility spiked up. Dollar was roughly flat. Gold, you see that gold is up 0.12%. Silver down 0.57%, and then TLT up marginally on the back of the 2-year and 10-year yield actually falling. But let's talk about the S&P 500. So we spoke about the weekly chart. Let's hop from the daily chart, and you could see some very, very interesting price action. So we had a very solid day yesterday. Equities looking really, really good, and now we're having somewhat of a, I guess you would call it a bearish engulfing candle. Not quite a bearish engulfing candle, but pretty much it has all of the makings of one. There's a tiny bit of buying coming in here at the bottom of the lows of the day. If we go to the daily chart, you can see we are somewhat forming somewhat of a bottom right here. However, there's no doubt about it. Today really was a day for the bears to go ahead and take hold. You can actually see that we were somewhat positive to kick the day off. And then after Jerome Powell's speech, equities just took a little bit of a nosedive, and we could even see the RSP going to negative territory now. So we're going to finish the day. The market's not closed. It closes in a few minutes. But all in all, not a good look here for the S&P 500. But ultimately, guys, you know the play. We are looking for opportunities to get long for an end-of-year Q4 rally. And ultimately, any dips we do get with support at the 64.79 and 63.42 will be dip buying opportunities. If we take a measured move to the absolute low, you're looking at about a 4.6% pullback. A garden variety pullback from the peak to the trough is about a 5.33% pullback. The market will freak out about that, but I think it's going to be a garden variety pullback if we do get a pullback, and it'll actually be very, very healthy. Whenever we pull back, guys, this allows us to sort of like form a base. Pullbacks in the market are actually a gift because it allows us to form a base, right, and a solid foundational support for us to make the next move higher and then to go ahead and break those highs. That's ultimately why we do like pullbacks. It's very, very healthy, especially in the context of the market right now. A very similar situation in the Nasdaq 100. You can see we opened slightly lower. We are actually moving below yesterday's low. So all in all, the week so far actually red despite the very positive momentum we got yesterday. But again, support at the 23,500, 22,663 levels here for the Nasdaq 100. The RSP, I think you can probably just look for support here at the 182 level. The S&P 600, you could probably look for support at the 1351 level, 1351 level right there. And then the Russell 2000 or the RUT, support at the 2242 level, right? So you can find support right there. But seeing relative outperformance here in these smaller names, which is positive. I do like to see that. We also are seeing that because yields are falling ever so slightly on the day. The 10-year yield, I did say we probably are going to top out somewhere here. It does look like that is going to be the case. And I think we're probably going to go ahead and have price discovery at these lows again sometime before the end of the year. The 2-year yield as well, we'll probably see 3.5, maybe even as low as 3.4% as the year goes on. I still think we're going to see strength in the dollar, in my opinion. The contrarian trade for the dollar right now is lower. I think that probably means we definitely go higher. Let's actually go ahead and look at gold. You guys want to know something absolutely crazy? If we look at gold on a year-to-date basis, right, go on a percentage return, 42% for the year. I do think gold probably needs to breathe, but I think ultimately any pullbacks in gold will be very short-lived. And if we do get a pullback to this 34.38 level, buy that dip because I think 4,000 gold is on the cards. 4,000 gold is probably programmed in already by now. Looking at Bitcoin, guys, as long as we hold this 109 area right here for Bitcoin, it's definitely going higher. This is a strong support zone, as you can see evidenced by multiple touches right here and right here. Ethereum, I'm not even bearish as long as we hold above the 4,000 level. In fact, the price action we're seeing right now, right here, is actually very constructive, especially because we are finding support well above the 4,000 area. We didn't even tip below here, right? So if we find support, maybe bounce off right here, I do think that probably means we do go higher for Ethereum. I continue to remain constructively bullish. Now, I am bullish on Ethereum, which means I am bullish on BMNR. But the stock is down in a significant way. It doesn't look like it, right? But if you actually take a measured move, peak to trough from here to where we are right now, that's a 15% move. That's how volatile this is. And I do think selling $50 calls or maybe even just buying equity will still be an $80 stock. I mean, the second Tom Lee announces that they're going to start staking their ETH, this thing is going to move. It's going to move in a very, very significant way. It is a volatile asset, so do be aware of that. And I also think another stock that I really, really do like at the moment is Lemonade. Lemonade is forming just a textbook move to the upside. Now, we are down for the day, don't get me wrong, but you see we put a low right here, had a massive gap up after earnings. We put in another low right here. This is essentially just higher lows in the context of 52-week highs right here, right here. This is just a textbook setup, right? And if we do pull back, as long as we hold above this line right here, which is the $50 mark, so as long as we hold above there, right, I do think probably we'll see us go higher, $60, $70, $75 on the cards for Lemonade before the end of the year.
And diving into sentiment, this is the fear and greed index, and we continue to remain in this greed zone. We've pushed from neutral into greed as we've seen investment into the AI trade from Nvidia, as we've got rate cuts and as we've seen the broadening. And this is not the time to sell. Many people think greed is the time to sell. No, it's not. In this zone right here, in the greed zone, you want to just hold, okay? You want to hold the equities and risk assets you have as we push into extreme extreme greed, and we will eventually get there, this is when you sell. So now is not the time to be selling any assets. This is actually the time to have conviction and to sit through the volatility. And we may get volatility in the future, because when we look at seasonality, we've completely bucked the seasonal trend here in 2025. You can see normally what we do get is some form of volatility around this period. We've bucked the trend, and that could mean we could experience the volatility now, or we could just completely buck the trend. Either way, be prepared for volatility in this market, but long term, any volatility we do get, buy that dip, because when we look at the earnings picture for the S&P 500, we're looking at mid-teens growth, especially if you exclude the energy sector, with 80% of companies reporting above analyst expectations, revenue outperforming, margins outperforming. What more can you want as an investor? However, a lot of this is already baked into the multiple profile. When you look at the S&P 500, right, trading at 23 times forward, the Nasdaq 100, 29 times forward. That is very expensive. Even when you look at it historically, this is like the median and average range right here. And both indices are trading well above their average and median ranges, right? However, when you look at the broader market, the equal weighted S&P 500 as well as mid caps, things aren't as frothy, trading roughly in line with the averages, slightly above with the equal weighted S&P 500. And that's telling us if you're looking for value, look to mid caps, look to the broad market, but you definitely do want exposure to these themes right here, because the AI trade has legs. Nvidia is going to inject $100 billion into the AI trade into the future, and that is going to drive the equity market. And looking at the macro, things are starting to slow down. We saw a 0.5% decline in the US leading economic index, the LEI, which indicates an ongoing slowdown in US economic activity, and that is why we are getting rate cuts. The Fed cut 25 basis points last week, and we are expecting another 25 basis point rate cut in October for a Fed funds of 4%. Currently, the Fed funds is 4.25%. So expect a rate cut in October. At least this is what the betting markets are telling us, but it's all going to be dependent on the data, and the data tomorrow that's really going to move the market is new home sales. Month over month, we're looking for negative 1.8%. That should total about 0.64 million as per the consensus. In terms of earnings, we don't have too much. Cintas Group is reporting. That's pretty much it. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.